Well, I think we'll get additional insight into it in Q4. I think the way to come at this, yeah, I heard Phil mention that China's going to ramp towards the end of the year, and I built that into my numbers. But if you back that out and look at the run rate that's implied in their guidance, it does suggest that they think they could have made more than 100,000 units in the third quarter if demand were there. So I look at that increase. There's a lot of focus on consensus. What I'd like people to focus on is that they delivered 97,000 units in the third quarter and 95,300 units in the second quarter. So that's not a big sequential bump. And that's really what caused me to say, hey, I'm not absolutely sure that the demand is going to support them getting to that range they put out there.
Why do you think, I mean, if demand is in fact leveling off, what factors do you think are at play? I mean, is it saturation? Is the competition finally catching up? Is it consumers who don't want to buy cars anymore? I mean, what is it?
Well, I couldn't tell you. I guess by process of elimination, I could say I don't think it's the competition. We've been out test driving the competition, and frankly, it's been pretty disappointing so far. So I don't think it's that. Could be that Model 3 is leveling off, and we have seen, if you dig into the numbers, as Phil did, Model X and Model S have pretty much flatlined. So I'm not sure what it is. But it is true that what has been this driver of very steep growth, the Model 3, has leveled off. And the pickup truck's cool. I think it'll be neat to see. But what really matters is that Model Y, which isn't coming until next year. So I'm wondering until then, maybe we see the growth start to level off a bit.
So ultimately, Joe, I mean, what's the number one factor behind your downgrade of the stock? Because, 97, it's not really a huge miss. You mentioned that you believe that the manufacturing capacity is for what they would need to hit that year-end target anyway. So is it really that you are concerned that demand won't be there in the fourth quarter?
I guess you could encapsulate it that way, but I just do the numbers and go where they lead me. I know consensus was at 98,000. Frankly, if I'd had 98,000, I wouldn't have been buying the stock, right? We had been saying that it was a buy based on numbers that we had for next year and based on an appropriate multiple. And then when you sit down and you run that through with this number that was frankly below what I thought they could do and then value that, you get to a stock that you don't want to buy. So it's less about the consensus for me. It's more about how this came in relative to my own modeling and what I think they're capable of doing. And so that's really what drove the downgrade.
More broadly, Joe, we are seeing a rotation within the market, or we have seen one away from growth stocks towards value stocks. We've seen the markets punish stocks that don't make money, that burn a lot of cash. How do you think Tesla fares if this sort of market trend, this momentum in the market continues, and if, in fact, the economy continues to slow?
Well, it's a high multiple stock, and it's a growth stock, and those companies do get punished in environments like this one where you get a flight to quality. I will say I think it's important. I've seen some people suggest that there are liquidity challenges for this company, and I don't believe that. We've modeled that very carefully. But anytime you get a company sitting on a high teens multiple of EBITDA and people get worried, those stocks get pressured. That's absolutely true.